Good morning. Welcome to The Sense of Things. It's Ron and Jeff here once again, and we are kicking off another couple of episodes of The Sense of Things, talking a little bit about what's going on in the world, what's going on in the economy, and maybe a few funny things to get us kicked off. Ron, how you doing, brother?
Good morning. So basically, we're just going to spend the next 2 hours talking about NVIDIA. Is that right?
There we go. Yeah, and it's comparisons to other things in history.
Yeah. All right. We'll have to set up a separate episode for that. But I think the mania is getting a little out of control.
I'm with you. I'm with you. Once again, I look at it and now we're down to basically we were the Magnificent Seven. Now we're down to the Magnificent Three at this point. And
Oh,
you've now got NVIDIA, Apple, and Microsoft in the $3 trillion range, which is just insane.
and yeah, that's another episode we should do. Compare one of those stocks compared to the European market, the Asian market. One company's market cap is larger than all of that.
Yeah. Yeah, and they were saying, I think I forget what the number was, 35 billion. Nvidia close to eclipsing Microsoft within $35 billion
But
at this
here's the
point.
crazy thing. I hear some people coming out and they're like, oh, you can justify that. And then everybody's got their own fakakta. I'm telling you, I got, I got PTSD of 97, 8, and 9, listening to people talking about valuation of NVIDIA. And not that it's a bad company, and it's
Yeah.
not like it's not making money, right?
Yep.
Microsoft and Intel were making money in the mid to late 90s,
Mm-hmm.
but the PE and the valuations were absurd. I don't
Yeah.
know where Nvidia's PE is now. I know it was like 60 or 70. And then
Mm.
I hear people that are valuation people talking about, yeah, you could make a case for it. I just know that two things. One, they don't want to say it's too high or the
Mm.
valuation's out of control, because if it doubles from here, they look like a schmuck.
Yeah.
And or they're in bed with fund companies or other people that have a big share of Nvidia stock, and they would basically be like, well, what are you killing the golden goose for?
Yeah. The golden
So
goose
that's
is,
why I don't trust some of these analysts coming out.
I don't trust most of them, quite frankly. I think
No.
it's a cartel and they just all kind of work together in collusion a lot of times. But yeah, I'm sorry, I don't buy most of the analyst research. I don't use the analyst research at all in my practice. I do my own research because I just don't trust anybody.
I actually would talk about it. I was originally one of the beta testers of a website that holds the analysts' feet to the fire, and
Okay.
they rate them based on their price targets within a calendar period of time.
Mm-hmm.
Maybe I'll share it with you. Maybe I'll share with the audience at some point. I don't want to make it look like I'm advertising, but I will tell you, it's a damn good Bible for not only information,
Yeah,
but following analysts that are truly worth their salt.
sure.
Yeah,
Yeah, and
anyway,
there's
all right.
not a whole lot of them. Yeah.
I know. So we retired the bad business decisions for a
Yep.
little bit. And so for the next, I think, 4 or 5 podcasts that I'm going to focus in on are just some fun facts. And these are some interesting ones because I will tell you, I'm a history guy. I love nostalgia. And every now and then you come up with something. I remember that. I'm like, really? So here is something interesting. So everybody who hasn't seen the Titanic,
Mm-hmm.
actually the original necklace that was on or in that movie was actually worth $10 million.
Ooh.
Obviously, back in the day with the Titanic, people were like looking at this. I don't know how much I don't know if they even said how valuable it was back then. If you look over the next 100 years, but I thought this was interesting. It's 171 carat sapphire necklace. It was a beautiful necklace, and everybody probably thought it was a stage prop. But I
Yeah.
thought it was interesting.
I didn't realize it was actually real. That's nuts.
That's my point.
Yeah.
And at the end of the movie, she threw it into the ocean.
I know. Like,
I don't
what the
think that I don't
hell?
think that's a spoiler alert for anybody that's listening. So, all right, next one. The Godfather was almost called the family Corleone.
Okay.
I did not know that. Who
That
hasn't
would
seen
be,
The Godfather, right?
yeah.
Or at least the first two movies. The third was pretty poor. But then it was eventually changed. But if you think about it, the book was called The Godfather. So
Yep.
why would they have called the
Why
movie
would you,
The
yeah,
Family
why would you
Corleone?
have changed it? But yeah.
Thought that was interesting. And my last fun fact, The Matrix Code, when you see the movie, and I only saw the first one, I fell asleep in the second one, but the Matrix Code is actually sushi recipes.
Okay.
It's not a code at all. It's a series of sushi recipes cleverly disguised to create the illusion of a complex code in the digital world of the phone. Now, I'll be very blunt with you. I like to cook, right?
Yeah.
I don't follow any recipes. I got my things that I like to do when I cook. And I'm thinking to myself, when you're making sushi, is there really a recipe?
Yeah. Is there theoretically, yeah, because they have similar things that they put into it, but nothing that you really have to follow.
Yeah,
At
I
that
understand
point.
like the sriracha mayo or whatever, but my thing is, okay, you take a picture of it, that's how you make it, right?
Yeah.
What you're not cooking the fish, you're not sautéing the fish. You got rice, you got seaweed, you got fish, and then you got a couple of other things. I'm
Yeah.
thinking to myself, how complex are the recipes?
Apparently, it's more complex than you thought. So
Obviously, if you watch the movie, you're not going to be able to stare at that code long enough to figure out what the hell those recipes.
I couldn't get past it. I started watching it, and I like Keanu Reeves and I like Lawrence Fishburne, but I just couldn't get past the movie.
The crazy thing is, and I did enjoy the first movie,
Yeah.
but like that movie, like many other similar type of movies, at some point you just get tired of a 10-minute drawn out fight. What else is exciting with him running through the air 20 feet, kicking and punching? How many times can you watch that in a 2.5 hour movie?
Yeah.
Anyway, I got a little tired of that. Okay, on to some serious stuff. So I thought this was interesting. Every now and then I'm able to get some interesting charts that, and I know we've been talking about this for a while, but this is the Chicago Business Barometer. It's also part, includes
Okay.
some of their PMI information.
Yeah.
But I thought this was interesting because this isn't going back the last 10, 20, or 30 years. This is going back over
Back to
55 years,
1970. Yeah.
looking at all this. And we talk about this all the time. We're not making this up, right? These are actual facts and figures. Now, I know we joke around quite a bit, especially that one time when we chastised the Atlanta Fed for coming out with an outrageous GDP number
That
when
actually
everybody
came
else
down.
was half of that amount or a negative amount, and they were almost dead on.
Yeah.
Look, again, I don't know how they even come up with that, but these are actual numbers with their charts. And I don't know, what is this telling us? We all know that the computer is strong, consumer is strong, spending money, they got jobs, it's flowing into their 401ks, they're out spending money, whether it's money they have or they don't, and it's on credit. But
Yeah.
all the other economic numbers have been trending down. And this chart is telling you a lot, other than in 1990, everything came down to this 35-ish level, telling you that a recession was pending.
Yeah.
Thoughts?
Yeah. Once again, I think our next episode, I'm going to have some stuff on this, but I totally agree with you. I think it to me is starting to show, and the cracks are widening in a lot of different areas. And we've been saying this for a year now, and I think a lot of people have been saying it for a year, that when do we start to see a recession? And you and I both have the same feeling about this whole soft landing, hard landing, recession, whatever it is. It's gonna happen. It's gonna happen, and it's starting to show signs across multiple different areas, not just okay, inflation's high, or okay, this is high. It's just starting to show in a lot of different areas. And once again, I think you've got to be sure that you protect in those cases. Unfortunately, you can't just sit back and go, I think it's coming, I'm just gonna stop investing, because it'll just beat you down, and the market will keep running at this point. And I think what you're seeing in the market is, when it was looking like, okay, we're not slowing, the market started to get a little bit soft, because okay, it doesn't look like the Fed's going to lower rates. And now all of a sudden we've seen some soft numbers, and now the market's rocketing up, because obviously the Fed's going to reduce rates. If you look at history, that is probably not true, they're going to wait and then it's going to go the
Higher for
opposite
longer.
direction. Yeah, higher for longer. They keep saying it. They're going to keep it higher for longer. That just means that they're probably going to do what they've always done in history, which is to massively overshoot the wrong way. Because
Yeah, and actually,
they waited for way too long to let inflation get out of hand. And they're probably going to wait too long, and it's going to cause the market to go the other way.
always behind the curve, but I think
Yep.
it was Warren Buffett's infamous quote: "The market could stay irrational longer than you can stay solvent."
Yeah, then you have money. Yes, absolutely. Totally
So,
agree with him on that too.
absolutely. All right, my next chart is taking the Chicago Business Barometer and their ISM manufacturing. And for the most part, it's almost stayed lockstep and converged. And look what happened starting literally January 1st, 2024.
Mhm.
It diverged.
Yeah.
Uh, what is this telling us? Now, it's not necessarily the divergence, it's the depth of the divergence to the downside.
Mhm.
Now, again, and I don't know if you know the answer to this or not, I do not, because I know that different feds have different ISM numbers. I actually never paid attention to the quote unquote Chicago
No,
ISM or the Chicago PMI numbers.
no, we've been
I
talking
know,
about Philly Fed, New York Fed, Richmond, all that. I've really,
and the New York Index Manufacturing or PMI. So I thought this was interesting, and I'd like to maybe overlay this at some time if we could ever get a chart of
mhm.
all the different feds and their ISM and
Yeah, to see if they're
PMI
actually
numbers to
following
see
along together, or
100%.
is it something unique to that region around Chicago that's having issues? But
Well,
honestly, I don't think so. Most of the ones we follow have been negative. So I would say they're probably along the same lines. It's interesting to watch how it shot up there for the end of 2023. And then 2024, it's just freaking going straight down.
for the most part, and look, this has been for in history, 50, 50.0 has
Mm,
always been like the demarcation line
yeah.
of expansion or contraction. And the interesting thing is its ISM number since late 2022 has been contracting.
Mm-hmm.
The PMI had a spike
Yeah.
in late 23, but holy crap, this is, if you just take a look at their historical numbers in the last 25 years, this is parabolic move to the upside. This is just falling down an elevator shaft to the downside.
Sure. Yeah,
So,
like I said, the weird divergence though between PMI and ISM, where ISM's been creeping its way back up. I mean, in the end, it's the PMI that's going to drive stuff because they're the people that buy things, from the manufacturer.
and my last one was the job openings and labor turnover summary. This kind of came right from their press release on June 4th.
Right.
And I'm not going to read all this. You and I have talked about this just ad nauseum
Mm.
probably
Yep.
about revisions. So I highlighted the March. This is the April, and why it's a month behind, I don't know, because it came out in June for
Yeah.
April. I don't understand that. But the March revisions were revised down to 133,000.
Mm.
And I just find that this is just crazy because down here, what's also not calculated, I didn't highlight it, is the number of quote unquote quits.
Yeah.
So there's a difference, and I don't know how they're able to decipher and differentiate the people that are let go, the people that are hired versus the people that just, I'm done, I'm quitting.
Yeah.
I don't know. And here's the other one, the total separations. This is my other point. The total separations were revised by 130,000. So what
Mm.
the hell's the difference between quits, separations,
Yeah.
fired? I don't know. All I know is it keeps getting revised the wrong way.
Yeah.
Whether it's the quits and the revisions or the quits and the separations to the
Those
upside
go
or
up and then the other
down.
stuff goes down. And yeah, in our next show, I've actually got a chart on this that I'll go over to look at the consistency of it. And the JOLTS number hit a high point up around 11 million, 12 million right after the pandemic. And it's been on a continual downward spike, which meant, okay, part of that was people getting back into the workforce and, of course, reducing those open positions. But I think what's happening now, from my perspective on the JOLTS number, is those jobs are starting to get pulled back. Companies are looking at, okay, we don't want to fire people right now, but we're just going to pull back the job openings where there's not as many job openings at this point.
Yeah. And actually, one quick thing I wanted to bring up here, and I didn't highlight it, I meant to bring it up, was we talked about this a couple of times that when the employment number, and actually we'll know
Tomorrow.
the unemployment for May. And, the interesting thing we always talk about, if you look into the details of the numbers, not just the headline, but the details, that half to two-thirds of the new hires were government jobs. I
Yeah.
thought this was interesting. In April, federal government jobs went down 8,000.
Yeah. Yeah. It was interesting. It was medical and governmental jobs, which I mean, I would argue the point that a lot of those, I would still categorize a lot of those medical jobs as government jobs in some way, shape, or form at that point. But yeah, it was really dramatic. And I think we covered that in a couple episodes ago when that number came out of this was just like a really weird aberration where we had seen this huge growth in government and all of a sudden there was a massive pullback in government hiring.
The whole point is they keep hiring, but here they let go. So
Yeah.
are these people that retired? Are these people that decided to go into the private sector? Again, we don't know the reasons behind all this. And unfortunately, financial media, economists, I mean, are looking at the headline number because that's the number they're plugging into their models.
Yeah.
I don't know what they're doing with all these other details as far as how the sausage is made, but
if we look at, although it's sometimes not the best indicator of it, if you look at ADP unemployment this week, it was a pretty big of a shock. I know I'm just looking at briefing.com. The forecast was 165,000 jobs and it came in at 152 on the ADP. So it's interesting, but what I've seen from the federal numbers is they're fudgy when they come out as a headline and then they revise them back. You've got to really pay attention to what they're doing back 3-4 months because they're constantly revising them. And those things have been going down pretty dramatically on the revisions. I don't know. If you look at the JOLTS number, you look at that, and like I said, in the next episode, we'll cover this a little bit more in detail. I just see that slowing. And that's the last kind of shoe that I see to fall potentially. So make sure you stay tuned for the next episode where we actually get into this a little bit more.
Never a dull moment, and there's always something to chat about. So
absolutely. The good thing is
week.
There's always news and plenty of stuff for us to talk about. So, folks, thank you for joining us once again. We do these shows for you. Make sure that you take the time to subscribe to the channel and make sure that you take the time to give us a little upvote. Let us know that you're around. We've gotten a lot of those lately. And it's been nice to know that you're out there and that you're liking what we're doing. So thanks a lot. And we'll see you back here the very next time.